Welcome back to Strongman Personal Finance. I'm your host, Christopher Bell, certified public accountant, long-term Boglehead investor, author of the book, Stop Being a Broke Loser. It's on Amazon for a whole $3. And hater of trash stocks and terrible YouTube personalities that are going to screw you over. Now today, or tonight, since I'm recording this late at night, we're going to go and talk about Lordstown Motors, which is another exciting electric vehicle company that's going to change the world and take out Ford and General Motors and Toyota and all the Volkswagen, all the legacy automakers. EVs are just going to conquer the world. Now, Lordstown Motors was brought public via SPAC, which is a special purpose acquisition company. And there was a lot of enthusiasm because they're making these super cool light-duty electric trucks that are targeted for sale to fleet customers. Well, if you didn't know, ladies and gentlemen, they're actually not producing the trucks yet. This is a very, very new company, and it is highly speculative, and they're not even selling crap yet. And of course, people on YouTube are pumping this stock because it's an EV stock. That's all that matters, ladies and gentlemen. EV. Buy, right? So this stock has been public since, looks like April 19th, 2019, April 15th. And you see some pretty wild fluctuations. So it goes up, and then it goes down, and then it goes up, and then it goes down, and then it goes really, really down. Now, the reason this is happening is because they're not even producing trucks. So any change, like any quarterly earnings, will drastically change the value of the stock. Because if production is delayed or something happens to the CEO, which something did happen, there's going to be these massive fluctuations. So this stock is highly speculative. Now, a lot of clowns on YouTube, they always talk about buying the dip. When you buy the dip, you're buying a dip for a stock that is producing good cash flows that is currently undervalued by the market. But you don't just buy the dip for no reason. Like, if a company's not generating revenues, cash flows, nothing, buying the dip literally makes no freaking sense. Because how can you possibly value the stock if there's not even cash flows, okay? I know you can project it, but as you'll see, projections are freaking garbage. So the funny thing is, Lordstown Motors came out with these forecasted sales they were going to have in 2021. They were like, oh guys, we're going to sell 2,200 vehicles. Or they were going to produce 2,200 vehicles. But then, of course, that projection turned out to be freaking wrong. And they've cut that back, and now they think they can only produce 1,000 vehicles this year. So you can't believe all the hype because people will promise you the world and then they won't deliver. They'll screw you over. And this is a perfect example of why you don't invest in these stupid SPACs and highly speculative EV companies because they'll promise everything and then, of course, they'll disappoint you. So this is written like, May 24th, 2021. The automaker reported Monday a disappointing first quarter earnings. Well, there weren't any earnings. They just lost more money than they were expecting. And they cut their production target from 2,200 vehicles to 1,000 vehicles. Wow. But I thought it was the future, bro. So that's impressive there. So then this happened. Lordstown Motors announces leadership transition. Lordstown Motors is a leader. They're a leader. Even though they don't produce anything. And electric light-duty trucks focus on the commercial fleet. To that end, Lordstown Motors' lead independent director, Angela Strand, has been appointed executive chairwoman of the company. So basically, there was a massive transition. So today announced several changes to his executive management team as the company begins to transition from the R&D and early production phases to commercial production phases. So I guess they're putting like a positive spin on it. But basically, all the old CEO, I think the CFO, and somebody else, the whole leadership team got transitioned out. Now they're saying it's because we're transitioning from this to that. But really, the prior leadership probably just sucked. So, number one, they are incurring massive losses, more than expected. Number two, they slashed their freaking production budget in half. Number three, the key leaders just changed out because I guess the previous people sucked. Now let's go look at their last earnings release. Earnings. release because there are no earnings. Look how pretty this is. Oh, it's got colors. It's exciting. It's the future. So there was an earnings call, May 24th, 2021. So let's go look at these slides. So these are the schlommos, the dorks, the leaders that got transitioned out. So Ken Burns is gone, I think. Rich Schmidt, he's gone. And I think Julio Rodriguez, they're all gone. They all got axed. But it was because they transitioned, right? Their mission, revolutionize the way people live and work through sustainable, okay, blah, 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 blah. Let's go look at the numbers. So, I mean, there's some more details. They got pretty pictures. They're making it, or they're planning production in Lordstown, Ohio. They're doing crash testing. They're, I guess, preparing their battery packs, lauding their product. Wow. Now, if you look at this production chart, so their beta build phase should have ended at the end of June 2021. And then they plan to enter pre-production and finish that in early September. And then they actually do production ramp up, or they should be by September 2021. Now, this company's already sucked previously. They've already undershot their expectations. So who knows what's actually going to freaking happen? This company is going to be bleeding money for a lot longer than some people expected. And they're going to be bleeding more money than people expected. But you know what? It doesn't matter. It's an EV company. All right. So let's look at some of the numbers. So in just 3 months, from January 1st, 2021 to March 31st, 2021, they burned $106 million freaking dollars. Okay? Holy crap. And you compare that to the previous year, they burned, almost $12 million? So they're burning money like crazy. And obviously they're not selling anything because they haven't even finished, or they haven't even started production yet. Man, this stock is ridiculous, okay? So they're basically going to be totally reliant on financing. So they're going to be issuing tons of stocks and tons of debt, and their projections suck. I mean, there's just so much that's wrong with this freaking company. I don't know if they're going to last. Now, let's go look at their financial statements. So I actually saw something freaking hilarious in the financial statements. Now, remember I told you to read the auditor's report? And we don't have to look at all the income statement because they're not selling anything. Who gives a crap? But I just wanted to look at the auditor's report. So this was freaking hilarious. Now, let's read this statement right here. So they were audited by KPMG. It's one of the big accounting firms. Opinion on the consolidated financial. We have audited the accompanied balance sheet, blah, 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 blah. The balance sheet presents fairly in all material respects the position of the company. Okay, that's good. As discussed in Note 2, the 2020 financial statements have been restated to correct certain misstatements. So I guess the accounting personnel of the company kind of sucked, and then the financial statements had to be fixed because the auditors caught it. Now here's where it gets really funny. Going concern. Now, a company's ability to continue as a going concern, what that means is if there is substantial doubt about a company's ability to continue as a going concern, that means they're going to be freaking bankrupt. That's what the auditors think, okay? If the auditors detect that, they actually have to disclose that in their auditor's report. So, as discussed in Note 1, this is the auditors, the company does not have sufficient liquidity to fund commercial scale production and the launch of sale of its EVs, which raises substantial doubt about the company's ability to continue as a going concern. Management's plans in regards to these matters are also described in Note 1. Let me guess. Fire your executive team, bring in a new team that's untested, and then issue a bunch of stock. Whoever would freaking actually buy their stock, and dilute the current shareholders. So that right there tells you all you need to know, ladies and gentlemen. This company is freaking trash, okay? Can they somehow survive? Yes. There's always a chance that anything can survive horrible problems. But it is way too early to put your money in this freaking stock, okay? Leave the investments in highly speculative stocks to freaking hedge funds and dude bros, but don't put your hard-earned money in such unproductive garbage companies like Lordstown Motors, all right? Just stay away from the stock. Now, if you're a day trader and you like to draw lines because like, bro, day trade, bro, whatever. Go freaking day trade the company. I don't recommend that. But I can definitely recommend that you don't put your freaking money into this company. That's it, ladies and gentlemen. Like, subscribe, don't buy Lordstown Motor Stunk, ride Stunk, and y'all have a wonderful, delicious night.